What was the lesson for stock investors this week? The recovery and reflation hopes or hypes sent real and nominal rates soaring. But this should not be a surprise to our viewers as we talked about this eventuality. The rising rates, as expected, triggered trouble in the momo and growth stocks that have soared to the moon. As real rates spiked, stonks stumbled, and it seemed no one had an answer to a resolution. But I did. Buy the unloved, undervalued, and beaten down stocks. What better solution could one have? So this week I bought Digital Realty, Coca Cola, Merck, and more Digital Realty. But I didn't use my cash. Instead, I traded in my oil stocks. No, don't worry for those of you who still hold oil stocks. They have more to go. And I was inspired by the Piano Man to also buy Verizon. All this with the Nasdaq down 3 weeks in a row, which is the worst streak for the Nasdaq since September. On the other hand, the late day sudden panic bid pushed the S&P 500 and the Dow into the green for the week. Today was total chaos. As an example, just look at the swings in the small caps from plus 2% pre-open to down 2.5% as Shinola hit the fan, and back up again to gains of 2% into the close. And the sudden reversal is the biggest S&P 500 gain when it had dropped by over 1% intraday since 2011's European debt crisis. Once again, thank you to the Piano Man for his inspiration. So, let's take a look at the charts. First, we'll take a look at the 10-year U.S. Treasury. This is what's causing all the problems. And as you can see in the upper left, the symbol is $TNX using stockcharts.com. And from this low way back here in September, we've had a very nice rise all the way up through here to the current level of 15.54, but the real interest rate is 1.554. Don't know why they can't figure out the math. But looking down here in the Mac in the lower portion of the screen, you can see this is a very healthy Mac moving on its way up. Is it over with? Is the rise done? Well, I'm not quite sure. It does look like it's weakening, so I think that's the probability, but I think that it also could provide trouble in the near future as well. In the upper portion of the chart, you see the RSI, and by this measure, it is weakening, at least in the last few days, from this peak up here. But once again, you never know what can happen because I think the interest rates are heavily manipulated. All right, let's go to our charts. And today we're looking at the 1-year daily chart on the spiders, the SPY, and the close on Friday was 383.63. Now, simply looking at the price chart, the important thing to pay attention to is this channel with this bottom trend line moving up through like this, and then the upper channel moving through like that. Now, these are not perfectly straight lines, but you get the idea. So, essentially, we bounced off here in April, and that was a great time to buy, up to the top line, off, and we stayed in this upper portion here through these few months. Into September, we popped up and through, but we had a move on the way down to bring us back within the channel line, and we've gone through here for the most part, bouncing up against the top there in mid-February, and down here down into the lower portion of the trend line in early March. And I think the greatest probability is that we will reflect back off this and up. So look for a basing and bottoming into next week, somewhat like this, and also somewhat like this. Now, moving on down into the other oscillators, we find that the volume is definitely picked up here. It's a little bit more severe than the volume during that period, also during this period, but nowhere near where we were in the March-April period of last year. Moving down into the MAC, you can see that we're trundling along above that zero line, so there's decent strength. And I think that the fast line came through here, is bumping up against that zero line. I think it's going to bottom and base here. Now, it can go below as it did here, and we're going to be just fine. So I think that's all it is just another healthy pullback. Nothing more severe than that. Into the histogram pretty much shows the same thing. And then the price rate of change, everything is hanging along that zero line. So I don't expect anything out of the ordinary type pullback. Relative strength, we have a double bottom in the RSI. I think we're going to bottom and base there. Here, we only had a single point. Here, we had a double. The second bottom was a little bit lower, but here, it's pretty even. And we're not too far from that 50 or midline. Into the stochastics, you can see that we're sawtoothing down here, and that often happens near a bottom and basing, as you can see here as well. This was a V bottom, but I don't think we're going to get that. This had a little bit of sawtoothing before a plunge down here in late June with a V bottom there. But I think this here is a little bit more common of a bottom. And so I expect some bottoming and basing into next week with the move to perhaps head up toward that 50, if not through. Into the Williams, you can also see pretty much the same thing. This is not a very serious sell-off. We didn't go down too far. We didn't go as far as here, nor as here. So I think that once we get back here to the price chart, what we're looking at is just your garden variety pullback with a little bit of scare. But the interest rates, I think they have more to go. So this was just a shot over the bow with regard to the rising interest rates, and we have more to come later, and it could be more serious, but not yet. Let's just watch this thing develop right now. This is your garden variety pullback. And for today, that's ChewDog Charts. Thank you.